Morning, Jason from daytradeideas.com. Been a bit of a wild ride in the old stock markets the last couple of days, so I thought I'd have a look at the S&P. This is the E-mini S&P daily chart. You can see that this whole, I'll blow it up a little bit, this whole area has the potential to be a very big double top pattern. It all depends on whether we hold all-time highs of 1846.5. I thought this candle on, let me see, that was Wednesday, indicated the fact that we topped out and we were going to collapse. Got quite excited about that, but yesterday we just turned right up again unexpectedly, and we're just now pushing towards those all-time highs, as I say. So it's just a question of, do we reject those all-time highs or do we close above them? It's Friday, it's a weekly close today, so of course that's added importance. It's expiry as well for February. All these things need to be taken into account, but I think at the end of the day, what really matters is, do we close above or below the all-time highs? If we close below, then that might trigger some profit taking next week, and that could indicate that we have a big double top pattern, which is really going to be very negative going forward. If we close above it, then hey, the bulls are still in charge, and off we go. On that note, the FTSE chart is just approaching January highs at 68.15. Well, actually, we're trying to break above there today already. It's a question of whether we sustain a break above 68.15 in the FTSE on tonight's close, whether that's positive or negative. I mean, we're getting very, very overbought on daily charts all over the place, but stock markets seem to ignore that quite regularly. If we do manage to close above 68.15, well, we've got last year's high at 68.61, so that looks like that would be the next target if we do continue higher in the FTSE futures. The only other thing that I think is worth noting is the Aussie dollar. We've had a good run up the last few days. We did call a low almost exactly when we bottomed out. Actually, I think it was January the 3rd we called a low in the Aussie, and it's had a really good run up. We hit this Fibonacci resistance at 90.80. We've come back off. I had thought we'd sell down to at least 89.20. Well, we got fairly close, 89.37, but we've rallied back up again, which is starting to indicate that we've got this inverse head and shoulders pattern. Can you see this? Left shoulder here, head. Looks like we could be forming a right shoulder here now. We're holding above 89.20. We've got a little bit of time to see how this shoulder performs. But if I was to draw a trend line, if I can find it, well, the neckline is basically that 90.80 area. So break above 90.80 is going to basically confirm this inverse head and shoulders pattern, and we'll be heading very quickly, I think, to 93.40 and probably beyond that. Just bear in mind we've got 100-day moving averages and 200-day moving averages on the way, 91.25, 91.99, but we're really not selling off like we should be with these negative stochastics on the daily chart. So I am thinking that we're just going to form this right shoulder, allow the stochastics to unwind. As soon as we get oversold, we break above 90.80 and then we continue higher. The weekly chart is really positive for the Aussie, so this does back up this scenario that I'm thinking about, and that 86.60 was such a big support on the yearly chart that it probably is a trend changer now, and we can go higher in the Aussie.